Open the app, choose the fund and start a sip. और फिर
सक्सेस झक मार के तुम्हारे पीछे आएगी.
has mutual fund investing become that easy? Really? At least that's how most investing apps try to portray. मुंह खोलो, ठूसो, निगल लो. ऐसा नहीं होता इंडिया में. एक ही एशियन कंट्री है जहां लोग सब कुछ खाते हैं. That's not India. So if we can be careful with our diet, can we not be careful with our investments? Can we not be careful with our finances? Yes, we can. But how? What influences the decision that we take? वो है क्या? वो है क्या चीज जो हमें गुमराह करता है? Over time, mutual funds have grown popularity. They have become popular for individuals who wants to grow their wealth. With the diverse asset options, professional management, and the potential for returns. All these factors have drawn flocks of investors towards this industry, towards the investing industry. However, investing in mutual fund is not a one-size-fits strategy. Achieving success in this field requires careful research and considerations of various factors. In this video, we'll see 8 different factors that helps or that influences our decision while we try and choose a mutual fund before we start our investing journey. And you thought investing in mutual fund was easy? Investing is tricky, isn't it? I always say this. Every step you take in the financial world is a challenge, and with it comes the next big opportunity. This video will give you an insight for sure, but the next one I post can bring you that next big opportunity. So like this video and subscribe to this channel right now because you don't want to miss it, do you?
Investor सोचता लगे किस राह, नीति मार्केट या डॉलर का दाम, सबका असर है ये है काम का काम. रिजर्व बैंक ने बढ़ा दी रेट, एमी हो गई ज्यादा डेली हो फाइट, स्टॉक्स ने किया एक जोर का झटका, पोर्टफोलियो बोला क्या हो गया भाई आज का.
Now let's see, the first factor that influences our decision is risk tolerance and investing goals. Every investor has a different risk tolerance. Something that is easy for me to take is not easy for you. Something that's easy for you to take is not easy for me. So the funds I would choose for myself would not be the same that you would choose for yourself. Even though we are of the same age, we have passed out from the same school, we have grown in the same area, everything remains same. Even so, even if we are brothers, we might not have the same risk appetite. And for Indians, traditionally we have been savers. We have saved our money. This becomes a key factor. Every investor assesses their willingness to face the market volatility and take on some hit to generate some returns for his money. If you're young, you might have a high risk appetite. So you as a young investor might possibly lean towards more riskier assets, while older investors might not be so comfortable with it. And hence, with your age, with your risk appetite, your goals change. Your final aim changes. The past performance and the track record of a fund. Many investors believe that the past record would continue in future. That carries a signal post for the future performance. Everybody does feel the same way. We Indians definitely do. The first thing we see, we open a fund, we see what is its CAGR returns. That's one of the first things we see. Now what we see, the CAGR number gives a final number after it has passed through various volatile markets, various undulations. Now when an investor sees that number and finds it's comfortable and he invests in it, and then the volatility hits and he faces the volatility with his own hard-earned money, that's where the perception changes. Upfront it looked very good. the CAGR numbers look very good. But that great number suddenly goes heavy on him or her when the market turns south. The funds category and the investing strategy. Now we all carefully select funds that aligns with our personal goals, our future goals. Equity, debt, gold funds, each investing asset is carefully selected, given an allocation which is comfortable for an investor for his or her wealth creation. Those seeking tax benefit, they invest in tax saving assets. The balanced funds, they cater to the best of both the worlds. So those investors who want a taste of both the worlds, they go for balanced assets. So what I'm trying to say is, your vision should meet this strategy. The key to success is not just picking a fund, a performing fund. It's important that the fund's philosophy or the strategy should resonate with your line of goal, with your strategy, with your financial aspirations. Economic condition and the market sentiments. The market goes ups and downs. Bull market ignites the fire in an investor's mind to invest his or her money, where the bear market instills the fear. It brings in the fear. People rush in to encash their holdings. This is a major concern, yet investment choices aren't dictated by the market trends alone. They are at the crossroad of the market data, the economic trends, the geopolitical tremors, and the investor psychology. All of these combined. It's a dynamic display which defines to an investor whether he should continue towards the capital growth strategy or consolidate him or his portfolio into more safer asset classes. In this delicate balance, every move you take is a reaction. Every decision is a calculated response, and everything you do forces the shaping of your financial world. Costs and fees. We are always cost conscious. We need everything cheap. We always see or try to buy assets at a lower cost, and hence expense ratio becomes a key factor for us, for all investors. So cost management becomes an essential part in one's portfolio making, in one's portfolio decision making. Investing horizon. Time is precious. We always say start investing early, right now, today, if you haven't done it yet. But investors for long-term, short-term, mid-term can significantly influence the decision making of choosing a particular fund. For Indian investors, each life stage brings in a distinct financial decision. And that's why we always say, if you're young, go high on equities because you have time in your hand. Regulatory compliance and tax implications. Equity funds and debt funds are taxed differently, and this difference significantly impacts the decision you take in your mutual fund choice. On the other hand, the regulatory changes, including the changes in the tax, political regulations, and investing regulations, they also affect an investor while making a decision or while choosing a fund. And finally, professional help and peer influence. Well, for Indian investor, the path to financial wealth is rarely walked alone. Advice from trusted sources is of immense importance, often shaping investing decisions as much as market trends themselves. A single recommendation can tip the scales completely. Preconceived biases, economic conditions, personal ambitions, and shifting global trends, all of them come in big effect. Now, as India is growing, it's reforming itself, it's changing every day, we investors also in our mind is growing in shape. We become resilient, we become adaptive, and we do all of these to meet the ever-changing, evolving world. These playlists here is the proof of this complex world and how well we have been able to handle and manage it so far. I'm sure you will miss something big if you don't see this. Go ahead, click on it right now. As of this video, adios.